Frequency Podcast Network. Stories that matter, podcasts that resonate.
In the market for a new vehicle for 2026? Well, cars and trucks are pretty expensive nowadays. I think it's, what is it, about a $60,000 average price in some cases? Yeah, sure, there are smaller vehicles to be had at a lower price point, and some are over $100,000. So it's a pretty wide range. We've had some big dynamic changes in the marketplace just in 2025 with electric vehicles, the removal of incentives, people getting back to gas-powered vehicles because the price for gas is pretty cheap. And then, just recently, Prime Minister Mark Carney announcing this trade deal with China that will allow up to 49,000 Chinese-made EVs coming into the Canadian market. But does that change the metrics? Which automakers may or may not be affected by that? And does it, change things from a pricing and demand structure? Welcome to another edition of In This Economy. My name is Mike Eppel. We're talking today about the auto market, cars and trucks. Joining me on the line today is Barish Arkurek, VP of Insights and Intelligence at Autotader.ca. Thanks for doing this today, Barish.
Thanks for the invite, Mike.
So, yeah, you heard my preamble there about what are you seeing in the auto market coming into 2026? A couple of years ago, used car prices were through the roof, and of course we went through the pandemic, and that kind of shifted the marketplace. But I don't think cars have gotten any less expensive, have they? Or are there some, is it, again, come back to supply demand? Do people have money to spend on vehicles this year?
I hope we have 3 hours to talk about this. Believe it or not, every year we said, okay, next year is going to be a normal year. Things are normalizing, but, something happens. Last year was the incentives and, Trump took office and the tariffs afterwards. And this year it's the Chinese EVs that were just announced. And this is in addition to what we had gone through during the beginning of the pandemic with the microchip shortages and supply chain disruptions that kind of disrupted both the new and used market. So there is a lot going on.
Yeah.
So, I can try to summarize it in a couple of minutes, but there's a lot going on and there's a lot of nuances, right? So maybe starting from the, if you'd like me to give a really high level what happened during the beginning of pandemic, I think that would be a useful context because, whatever happened back in 2020, between 2020 and 2023, which we estimated that around 1.5 million fewer new cars were sold. That has an implication in around this time because these cars that weren't sold, missed, lost, whatever you want to call them, they're never making their way back into the used car market, which obviously impacts the supply side of things. And on the other side, if you look at the demand aspect of things, demand has been on the higher side. In the beginning of the pandemic, it was because of different reasons. People didn't want to take public transportation and ride-sharing services. And local travel was for obvious reasons, it was very popular. So there was an interest in private vehicle ownership. And as you alluded to in the beginning of the call, prices both for new and used vehicles went up by quite a bit. And to be more specific, in 2021 alone, used car prices went up by 21.7% just in 2021. So again, going back to what I was talking about, every year there's a new dynamic, something big happens. And now looking at the market, it was kind of normalizing beginning of last year, and then the tariffs obviously happened. And maybe a minute, if I can take a minute to explain what happened during last year is that, because whatever happened, whatever we just talked about was really fresh in consumers' minds and, these changing dynamics and the impact on prices, everybody expected that there would be some pricing impact because of the tariffs. And some consumers accelerated their purchases, and they obviously didn't want to pay more for the vehicle that they were interested in. And obviously that created another supply and demand imbalance. And therefore, we started seeing an uptick in used car prices, specifically starting in around March. Usually what happens is that prices, especially on the used side, prices start on the higher side and they come down throughout the year. But because of the tariffs, because of the impact on demand, prices reverted between March and July. They uptick a little bit, and in the last couple of quarters in Q3 and Q4, they started to come down. But said on a year-over-year basis, looking at December prices, they're still above last year's levels, and the average used car price is $35,000 and $201 rate.
That's the used car price.
That is correct.
That's still expensive. But having said that, if you're looking at $60,000 for a new car on average, the used car market, just by pricing structure, gets more demand because it's more affordable. Yeah, you're not buying something right off the showroom, but you are saving the depreciation, and maybe that's not even as much of a thing as it used to be. But just from an affordability standpoint, there's just going to be more demand for used.
Yeah, so you summarized that really well. So looking at new car prices, average price of a new car, again, in December of 2025, it was $63,439, which is a 2.7% decline on a year-over-year basis. But especially on the new car side of things, there are a lot of nuances. So when we look at the availability, inventory availability, the picture is very different among different automotive manufacturers. For example, domestic brands, they have a lot of availability. And if you look at Asian brands, more affordable brands, there's not much availability. So prices at the aggregate level, they seem to be down on a year-over-year basis. But on the other hand, there are a lot of nuances at the make level and make and model level. And just to add one more thing, because you made a good point about the used car market and how it relates to the new car market. Whenever there's a fundamental shift in the new car market, we see a big impact on the used car side of things. Different reasons. So, for example, again, going back to COVID, it was the availability. And obviously, some of the consumers, based on our research, the consumers that we surveyed stated that 31% of them stated that, I couldn't find the new vehicle that I was looking for, therefore I shifted over to used. And now the dynamics are different. Obviously, we've talked about the affordability. Cars are more expensive than they used to be. And this is pushing some of those consumers who were stretching to buy a new vehicle. You know what? I'm not going to, I don't even know if there's availability. And even if there is, it might be more on the expensive side. So I'm going to look for a more affordable option, which tends to be more on the used side. So, and again, this creates additional demand on the used vehicle market. And again, we've talked about the impact on the supply because of the COVID. So supply is already constrained on the used side. So, it creates imbalance and therefore keeping prices on the higher side. And to be honest with you, we don't expect these dynamics to change at least until mid to end 2027. So if any of your listeners are waiting for prices to go back to pre-COVID levels, which was around $24,000 in 2019, we don't expect to see that anytime soon.
Yeah. I mean, the argument from the automakers is that cars are more expensive because of all the electronics. Yeah, they're more expensive to produce, that kind of thing. I get that. Having said all of that, are we still maybe on the cusp of seeing the effects of tariffs? Because I think you mentioned that, every sector of, production basically front loaded a lot of things, try to get things in before tariffs actually took effect. So, with the, back and forth movement of vehicles across the border, are we still potentially going to see fewer vehicles coming in, for example, from the United States and maybe ramping up from overseas overseas supply. I don't know. What's your thought about that?
If you look at the aggregate level numbers, prices we've talked about it, they're down. And when we look at availability, there are more new cars available in the market. But that is somewhat deceiving, these high level metrics, because you have to look at it at the OEM level, at the manufacturer level. So there's certain brands which are high on demand and, they've never recovered from their pre-COVID production levels. There's like very little availability, which is keeping their prices very tight. But on the other hand, if you're, for example, looking for a domestic light truck, there's a lot of availability. So this story is different. But on the other hand, answering your question, if there are no changes in our relationship with the United States, and, as you probably know, the CUSMA negotiations will start in beginning of July. If there's no agreement on that, there will be probably an impact on how the new market's going to evolve in the next while. Because as you said, right now, because of the availability, some manufacturers were able to absorb these increasing costs, increase in demand, because there is inventory available. But on the other hand, this is not infinite, right? There's going to be, if there's a big change in the macro dynamics, there will be an impact on the new car side. And I don't want to repeat myself, but as I mentioned, whenever something big happens on the new car side, there's always an impact on the used side. And the used side, especially from the supply perspective, it's already constrained. And if you add more demand to it, you can guess what's going to happen down the line.
Are people hanging on to their vehicles longer? And does that affect the used market? If that's the case.
Yeah, so we looked at the average mileage. We looked at the average age of the cars that are on for sale on Autotader.ca, and there's a bit of an uptick. So to be more specific, the average age was, I believe, around 10 years, and now we're sitting at 12 years. And then the average mileage was around 70,000 kilometers. Obviously, I'm talking about the used cars. And now we're looking at 77,000 kilometers for the cars that are being listed for sale. So, yes, they seem to be holding on to their vehicles a bit more. But on the other hand, again, I don't want to open any more sidebars than I have to. But, when you look at the market as a whole, I'm not an economist myself. I've studied economics, but there's this phenomenon of K-shaped economy is being talked about a lot.
Yep.
So certain parts of the economy, they're doing really well. Certain parts of the consumers, they're not doing so well. So that's also playing its part in how consumers buy. So yeah, I don't want to make the story more convoluted than it already has been. But there's lots of nuances. There's lots of moving parts, and probably, at least more important, there's a lot of question marks, right? Because, and I'm sure we'll touch upon this, the Chinese EVs and how that would have an impact in the market. But there's a lot of question marks around our trade relationship, and the EVs, the mandates, the incentives. So there's a bit of confusion. And if I have to be extremely honest and transparent, sometimes I'm even confused about what's going on, right? The things change, and there's all these targets and numbers that are flying around. But when it comes to planning and how we're going to be able to achieve these targets, the mandates, whatever, I'm sometimes having a trouble understanding what's going on. And if if I put myself in the consumer's shoes, and if I was looking for a car, that would confuse me too. So probably that also plays a bit of a role in the market. So some further clarity and plan and, as to how we're going to get to where we're going to get to would be much appreciated by everybody else, everybody, including myself.
Before we get to that issue of electric vehicles and BYD and such, I did want to touch on the question about interest rates, because it wasn't that long ago you went to a car dealership and you could get 0% borrowing. That doesn't exist. If it does, it's pretty few and far between. And on the used market, I think it's, what are you looking at? 7-8%, if not more. So how do interest rates and borrowing costs factor into all of this?
Great question, and I will tell you. So we we look at transactional data internally. We have a really good understanding of monthly payments and interest rates and all that stuff. So let me tell you what we see in our data. So looking at new vehicles, the average interest rate peaked in November of 2023. It was 7.4%. And now, as of December 2025, we are looking at 4.8%. So it came down by quite a bit, by around 2.6%, which kind of corresponds with the decline in Bank of Canada's reduction in overnight rates. Obviously, good news for consumers. But again, going back to what I was trying to tell you about the availability, when we look at the interest rate reductions by OEM, they are mostly coming from OEMs that have lots of availability, right? So if there's a lot of available supply, obviously, in order to stimulate sales, what do? One of the levers that they have is to reduce interest rates. But on the other hand, if there's a lot of demand and low supply on certain OEMs, we don't see as much decline in interest rates. Yeah. And going to, and actually, you know what? I can actually tell you a little bit about the payments as well. So based on the interest rates that we've just discussed, the average monthly new car payment is now $979 a month.
Woo! That's all.
Yeah.
That's not cheap. And yes, they say, oh, it's weekly or bi-weekly, so it looks a little less expensive in the ads. But wow, almost $1,000 a month.
Yeah. And then if you look at it by province, believe it or not, there are a couple of provinces where the averages are now over $1,000. So, and again, comparing it to 2019, the average payment of a new car was $663. And now we are looking at $979. And this story is not very different for used. Average monthly payment of a used car was $472 back in December of 2019. And now we are looking at $637 on average. And it came down in the last couple of years. There's a little bit normalization in used car prices. So they came down a little bit, but again, compared to where they used to be back in 2019, they're still on the higher side.
Yeah. Well, let's get into the issue. I wanted to get into the discussion about Chinese EVs coming into the market. Now, the Prime Minister said this is going back. It's kind of going back to where we were. I don't remember seeing any BYD Chinese built vehicles on Canadian roads specifically. Nevertheless, these cars, say what you will about them, are much less expensive. I mean, there's talk they're going to be $20,000 to $25,000. Yes, you can talk all about the issue of government subsidies on China's end, that kind of thing. But when we're looking at the consumer, and you're talking about $1,000 a month for a car payment, $63,000 on average for a new car, is it going to be a situation where people are just going to say it's affordable? I don't care where it's built, and I don't care if it's spying on me either. That's another talking point about these Chinese built cars. They have to still set up a dealership of some sort, to get these going. But I have a feeling you're going to see more of these. Am I wrong?
Yeah. So look, I can provide you some pricing figures for what we see in our own data. So when we look at new battery electric vehicles, meaning excluding hybrids, the average price is over $66,000. They came down a little bit because there's overall the interest in EVs have been declining. So we run this annual survey every year, and one of the key questions that we ask consumers is whether they would consider buying an EV as their next vehicle. And back in 2022, this was 68%, came down to 56%, and now 46% the following year. And last year, it was 42%. So overall, there's a decline in interest. And as we've just talked about, right, the prices are on the higher side. So maybe going back to your question, right, would they be welcome from consumers' perspective? And again, I don't want to sound insensitive. I understand that there's larger implications on, what about the cars that are being manufactured in Canada? What about the potential impact on unemployment? What about the data security issue that you just alluded to? So, but if we just focus solely on the pricing, $35,000 and below, we believe that there is going to be a lot of demand on these vehicles. But that said, $49,000 cars, it's a relatively small portion of the new car market. Like last year, just about 1.9 million cars were sold. So 49,000 cars, even if they were all below 35%, which is probably not going to be the case, it's 2.6% of the entire market. So at the aggregate level, this is because I keep getting asked this question, is it going to be have an impact on the average prices? Probably not. But on the other hand, Prime Minister Carney mentioned that, he would increase the quota over time. So down the line, it might have an impact. But from the demand side, we believe that there would be demand on these cars because they're considerably, assuming that they will be $35,000 and below, they are considerably cheaper than what we see in the market right now.
Well, the other thing about this too, everybody talks about BYD, build your dreams, by the way, if there are people who don't know what the acronym stands for. But Tesla builds EVs in China. Volvo builds EVs in China. Could they not use a tariff-free situation and ship some Model Ys to the Canadian market? I mean, it's not just one Chinese domestic automaker we could be talking about here.
Very good question and very good observation, Mike. And I 100% agree with that, because when you think about a new brand coming into a new country, right, you obviously need some sort of a business model, whether it's through dealerships or direct to consumer. You need to establish service centers. You need to be able to service your customers. There's a lot going on. That's not my expertise. But and when we talk about the number of cars, like 49,000 cars in the first year, and again, not one company is going to be able to absorb all these cars, obviously. So it's going to be segmented. So making some assumptions, let's say 5 different companies, 10,000 cars, like it's very small number of cars to be sold in a year to be able to go through all these expenses and building these networks and whatnot. But on the other hand, right, we know that China subsidizes their EV companies a lot. There's a lot of incentives. Because obviously they're being aggressive. They want to be associate themselves with the EVs and the future of the automotive market. And there's a lot of incentives and subsidies that are being provided. So could they take some hit on their profitability in the first few years in order to establish themselves in Canada? Maybe. So there's that aspect. But on the other hand, I think your point of, there are Teslas and Volvos that are being produced in China, and they obviously already have these networks already set up in Canada. So would they come? I would, again, I'm speculating a little bit, probably. They're already here.
Yeah, I wonder if BYD's got to partner with somebody.
Yeah, maybe.
That's because they have literally no dealership network here.
Yeah, exactly.
to move these vehicles. Listen, this was a fascinating discussion. I really appreciate you joining the chat this morning.
My pleasure, Mike. Anytime.
And that was Barish Arkurek with Autotader.ca. Hey, thanks for listening to this podcast this morning for In This Economy. If you like this episode, drop me a line. I'd like to hear your thoughts, comments, concerns, questions, whatever you have. My email address is mike.eppel@rci.rogers.com. And on social, I go by @Eppman. That's EPPMAN. We'll talk to you soon.